Welcome to TradeTheMBI.com. This is John's report is for the 3rd of July, just before the holiday. And, well, you can see it. We expected this move. There was no surprise. We had the turnaround taking place as we were meeting with shorts here on the MBI reading. And clearly it was a simple move. From there, we had the reset of short-term buyers coming off the dip below the negative 13. And that was all it took to really see it. I mean, pointed out the rising gold when we were up here, and that usually calls for that move back to the 100%. It's just a question of how long it was going to take. It only took a few days, so right in line. And interestingly enough, the Nasdaq a little bit shy, which was interesting. So the S&P really took it over, and we saw that on the DSC because you had a much stronger crossover of midterm buyers in the green here, crossing over the shorts earlier, and it wasn't so on the Nasdaq, and that's why it was a little bit more muted. But in general, the Nasdaq had been outperforming in general, so kind of evens things out a little bit. Not a surprise, nor will it be when we fill back in to take care of the positive extremes, but that'll happen when we get the signaling for it. And of course, treasuries took a major drop, but then popped back up again as more money flowed back in there. Again, still ridiculous because it's still overinflated given what the rates are, and there's no expectation for change. But there's only so much that can happen when you flood in the kind of money that goes into it, and there's nowhere for it to go with the yields to reduce. Oil popped up just a little bit, not enough to put anybody in a scare mode just yet. So, still, as long as it continues to trade across, interestingly enough, though, we are getting a DOC orange dip down below that could give it more legs back towards that 50%. And certainly with the MBI magenta well above, poised to do that, that would put more pressure, I think, on the markets a little bit. But you'd have to break out of that even range. The euro had dipped lower, then turned around for no real particular reason other than they can't let it go too far. So they keep fighting it every time it comes back. Did get enough to get all the way to the open of that large positive extreme bar. So from my viewpoint, that fills that one in, so that was enough to support it in that particular state. And from a gold standpoint, a little bit of pop up, again, matching what oil was doing in this particular state. Um, and again, it's all going to depend on what we start seeing from unemployment and or inflationary numbers. And with oil being modestly depressed, that should keep that modestly in play as far as a neutralized effect. So I wouldn't expect too much from the gold space on that. We had been looking at cryptos. They had, well, at least Bitcoin in particular, off of more news related information, a little bit of back and forth. And again, we would expect some of that to take place given that, a lot of this took place under positive extremes. There's going to be some fill back within that and a little bit of soft reading. Still no real major short activity. It was a strong DOC spread within there, which was enough to give it, but you can already see orange quite elevated. So likelihood of that popping back down will push it back up towards the highs. And the real lagger here from Ethereum still was positive, but not enough. And, sort of like that rising market lifted all boats in that particular case. From the 50K standpoint, that was been cleaned from the beginning of these buys up towards the peak here. Once the magenta crossed back over, just a matter of following it. But of course, all that's under positive extremes. So it's just a matter of looking back at that 44, 42 range as fill back when we get significant drawdown in this particular case. But you look at that steel, super negative. Now, until that gets back up over zero, you're probably going to see some additional weakness within it. But once it gets back to that zero, that will be the end of any kind of fill back and start the next leg. Pretty straightforward from there. So intraday, you can see pre-market, not a whole lot was taking place. It was a slow build to it. And then just as things got right before pre-market, they pumped it a little bit. And then once the pre-market opened, it was just off to the races. And that just took off from there, and you got a partial fill back towards the end of action. But overall, everything was pretty consistent for what we expected for the month, and it was a lot more activity than a lot of people were thinking was going to happen for a June. But we could kind of see it building from the way that May ended out, and they got rid of your sell in May, go away types, and sort of put them under the gun because now they're behind the curve on the situation. We'll see if they're going to have to jump in to make up for being late to the party. But that's the advantage of having the indicators. Be sure to check your emails for July indicators so that you've got them all set to go for the action to begin the week. And of course, with the break in the holiday, you'll have a little bit of break. So that's always good. I'll put anything relevant on the Skype chat. Trade well.